clients become more and more active. And I think that's kind of one of the key things we've seen, just the breadth of clients now eager to kind of get more actively involved in trading
in crypto,
the asset class.
Rumors are often as influential as official announcements. A single whisper on Twitter, now X, a half-baked Telegram thread, or a vague comment from a podcast can spark an entire cycle of speculation, especially when the rumor ties together big banks, regulation, and tokens with institutional potential. The alleged connection between HBAR XRP and Goldman Sachs is one of those narratives that refuses to die. To understand why, we need to trace where this story began and how it evolved into one of the most persistent talking points in crypto conspiracy circles. The rumor didn't start with a formal press release or an insider leak. Instead, it seems to have originated in fragmented communities across Reddit, Telegram, and crypto Twitter. Around late 2021 and early 2022, right when institutional adoption became a hot topic, threads started surfacing that tied ISO 20022 compliant cryptos, a list often including XRP, XLM, XDC, ALGO, and HBAR, to major banks. Goldman Sachs was one of the names that kept coming up because of its deep history in global finance and its cautious yet persistent exploration of blockchain solutions. One viral post speculated that Goldman Sachs might be testing tokenization pilots on Hedera while simultaneously keeping an eye on Ripple's network for cross-border settlement. The logic was simple. Goldman Sachs manages trillions of dollars in assets and sits at the center of global financial infrastructure. If blockchain is the future, they won't build it from scratch, they'll plug into existing rails. XRP and HBAR, both being designed for speed, efficiency, and compliance, fit the profile. Unlike smaller fintechs, Goldman Sachs represents legacy power. When their name is attached to any crypto project, even through speculation, it adds weight. Back in 2018, Goldman was among the first banks rumored to be exploring a Bitcoin trading desk. That story never fully materialized, but it cemented the idea that Goldman was quietly preparing for a digital asset future. Over the years, Goldman has partnered with Circle, the company behind USDC, invested in blockchain startups through GS Growth, issued tokenized bonds in partnership with the European Investment Bank, explored digital asset custody and trading services. Each of these moves kept Goldman's name in the crypto conversation. So when retail investors looked for possible institutional backers of HBAR and XRP, Goldman Sachs was a natural candidate. The XRP connection predates the HBAR one. For nearly a decade, Ripple has been positioning itself as the bridge between traditional banking and blockchain. Its partnerships with Santander, SBI, American Express, and central banks gave XRP a reputation as the banker's coin. The SEC lawsuit in 2020 only amplified this narrative. Many believe the lawsuit itself was a smokescreen to delay XRP's full integration until regulatory clarity arrived. Thus, whenever big banks like Goldman were mentioned, XRP naturally entered the conversation. The theory went something like this. Ripple solves cross-border payments. Banks need liquidity solutions. Goldman Sachs, being a major player in FX and settlement, would benefit from RippleNet and XRP integration. Even without proof, the dots connected neatly enough to fuel conspiracy-style discussions. HBAR entered the rumor mill later, especially after Hedera's governing council expanded to include giants like Google, IBM, Boeing, Standard Bank, and LG. People began noticing overlaps between Hedera's corporate partners and the traditional financial elite. Goldman Sachs wasn't on the council, but whispers suggested that banks were already testing tokenization use cases on Hedera's network, especially for assets like real estate, carbon credits, and securities. In 2022, a screenshot allegedly showing Goldman Sachs experimenting with Hedera-based pilots circulated online. Though never verified, it was enough to spark speculation. If Google and IBM were already on board, why wouldn't Goldman be circling as well? This tied back to another narrative, that Hedera was quietly positioning itself as the preferred enterprise blockchain for tokenized finance. Since Goldman Sachs has openly stated that tokenization is the future of markets, the overlap was hard for investors to ignore. What makes the rumor especially sticky is the idea that Goldman Sachs wouldn't pick just one ledger. Instead, it might leverage multiple blockchains for different use cases, XRP for cross-border settlement and liquidity, HBAR for tokenization, compliance, and enterprise-grade contracts. This multi-rail theory made sense to retail investors because it mirrored how banks already operate. Just as Goldman Sachs uses different tools for FX, equities, and derivatives, they might use multiple blockchains to cover diverse needs. Once crypto YouTubers and ex-influencers picked up the rumor, it took on a life of its own. Titles like Goldman Sachs secretly testing HBAR or XRP plus HBAR equals Wall Street's blockchain play drew massive engagement. Even if these videos offered little concrete evidence, they fed the fire. Over time, the rumor evolved. First, it was Goldman is testing XRP. Then, Goldman is exploring Hedera. Finally, Goldman Sachs is building rails on both XRP and HBAR. By 2024, some even speculated that this was part of a coordinated ISO 20022 rollout, where multiple compliant assets would serve as the plumbing for a new financial order. There are three main reasons this narrative persists. Plausibility. Goldman Sachs has shown interest in tokenization and blockchain. XRP and HBAR are designed for institutional use. The overlap isn't far-fetched. Secrecy. Banks rarely disclose pilot programs until they're fully operational. This vacuum creates fertile ground for speculation. Hope. Retail investors want to believe their holdings could be tied to a trillion-dollar institution. If Goldman Sachs were truly building on XRP or HBAR, it would validate years of patience. The rumor's origin wasn't a single leak or a confirmed deal. It was an accumulation of breadcrumbs, Goldman's past blockchain experiments, Ripple's positioning with banks, Hedera's corporate counsel, and the overarching ISO 20022 narrative. In the absence of transparency, these pieces were stitched together into a story. Goldman Sachs is quietly building with XRP and HBAR, and when the switch flips, the entire financial system will run on these rails. If you've been watching the evolution of crypto closely, then you know the big players on Wall Street don't just dismiss blockchain anymore. They study it, invest in it quietly, and position themselves to profit once the timing is right. And one of the names that always comes up when you peel back the layers is Goldman Sachs. For decades, Goldman has been that institution with inside access, the one that seems to be one step ahead of global financial shifts. Now, when you start seeing whispers about Goldman Sachs quietly exploring or even piloting blockchain-based settlements, you can't help but wonder, which networks are they looking at? Because the narrative isn't about them choosing Bitcoin or Ethereum. The real story sits with purpose-built networks like Hedera, HBAR, Stellar, XLM, and XDC. Goldman Sachs has a long track record of moving before the crowd. Think about 2008 when the financial world was collapsing. Somehow Goldman managed to position itself not only to survive, but to be rescued and emerge stronger. They always seem to have the government's ear, and that tells you everything you need to know. If blockchain is going to underpin the next financial system, you better believe Goldman isn't going to be sitting on the sidelines. They're going to pick the rails that will be used for cross-border payments, tokenized securities, and settlement systems. And here's where the speculation heats up. HBAR, XLM, and XDC each align almost perfectly with use cases Goldman would find attractive. Take Stellar, for example. Stellar's entire design has always been about remittances and cross-border value transfer. Its partnership history with MoneyGram, its integration with Circle's USDC stablecoin, and its reputation as a network for cheap, fast, regulated payments make it a logical candidate for any large financial institution. If Goldman is exploring tokenized fiat or central bank digital currency, CBDC corridors, Stellar is one of the most obvious fits. And what people often overlook is the fact that Stellar has a structure that appeals to regulators. It's not chaotic, it's not a meme-driven ecosystem, it's a payments-focused protocol that has been positioning itself for legitimacy since day one. That kind of clean reputation matters when we're talking about Wall Street adoption. Now think about Hedera. HBAR brings something very different to the table: enterprise-grade governance and technical power. We're talking finality in seconds, security rooted in asynchronous Byzantine fault tolerance, and governance led by a council of global giants like Google, IBM, Standard Bank, and even the London School of Economics. If you're Goldman Sachs and you're considering which network to use for institutional-grade settlement, Hedera looks like the safe bet. It's built for corporations. It's built for compliance. It's not just a speculative coin, it's infrastructure. There's even evidence of Hedera being tested for tokenization of assets, carbon markets, and supply chain solutions. That's exactly the kind of narrative Goldman would tie itself to without hesitation. And then there's XDC. The average retail investor barely talks about XDC, but that's where the interesting part lies. XDC is heavily aligned with global trade finance. It has connections to the Trade Finance Distribution Initiative, TFD, and its architecture is designed for interoperability with legacy financial systems like ISO 20022. XDC's whole angle is tokenizing trade instruments, letters of credit, invoices, guarantees, things the average crypto investor doesn't even think about but that banks like Goldman live and breathe every day. Imagine Goldman Sachs wanting to digitize $100 million worth of trade finance obligations. They're not going to use Dogecoin. They'll look at something like XDC because it integrates seamlessly with the systems already in place. Now, here's where the rumor mill starts to buzz. People claim Goldman Sachs has been quietly testing distributed ledger technology with consortia of other banks, even exploring the idea of launching its own blockchain. But launching your own blockchain is expensive, risky, and unnecessary if there are already networks purpose-built for these tasks. What makes more sense is Goldman building on top of existing rails that are already secure, scalable, and recognized in regulatory circles. That's where HBAR, XLM, and XDC come in again. Each one fills a slightly different niche, and together they form a kind of hidden trifecta of institutional adoption. HBAR for enterprise governance, XLM for cross-border retail and CBDCs, and XDC for trade finance. People often say, if Goldman really was working with these networks, wouldn't it be public? Not necessarily. That's not how they operate. Goldman doesn't telegraph its moves until it's already positioned and ready to profit. Think back to their entry into commodities, derivatives, or mortgage-backed securities. They build positions quietly, they form partnerships discreetly, and by the time the public finds out, the gains have already been secured. The same pattern could easily play out here. By the time Goldman publicly acknowledges blockchain networks like Hedera or Stellar, it might already have infrastructure and clients on board behind closed doors. The other angle worth paying attention to is regulation. The US and Europe are both moving toward stricter crypto regulations, and institutions like Goldman don't gamble on uncertain frameworks. They want networks that can comply with ISO standards, that can handle KYC/AML integration, and that can withstand government scrutiny. Stellar is already in the ISO 20022 conversation, Hedera has enterprise compliance baked into its governance model, and XDC is positioning itself within the trade finance space with exactly those standards in mind. So when you think about where Goldman Sachs might place its bets, it's not about hype coins or NFTs. It's about infrastructure tokens that already align with global regulatory trajectories. Some argue this is all speculation, but speculation has teeth when you start lining up the breadcrumbs. Look at the growing number of pilot projects in tokenized assets. Look at the BIS, Bank for International Settlements, pushing for cross-border CBDC corridors. Look at big banks quietly hiring blockchain engineers. When you see that context, suddenly the rumors about Goldman Sachs aligning with networks like HBAR, XLM, and XDC don't look so far-fetched. They look like logical next steps. And here's the part retail investors often miss. If institutions are indeed exploring these networks, they're not going to buy in small. They'll be handling billions of dollars in tokenized value. They'll need liquidity. They'll need stable, reliable networks. And that demand translates directly into pressure on token prices. If Goldman Sachs were to launch tokenized securities on Hedera tomorrow, HBAR demand would spike. If they set up a CBDC corridor on Stellar, XLM liquidity would explode. If they used XDC to tokenize global trade finance, you're talking about trillions of dollars of instruments that could eventually pass through that ecosystem. The multiplier effect on token value would be enormous. Of course, none of this is confirmed. It's not about proof, it's about probabilities. And the probability that institutions like Goldman Sachs will choose purpose-built, regulated-friendly, enterprise-grade networks is extremely high. Retail investors are still chasing meme coins, still hoping for overnight riches, But the real smart money is watching where the rails of the future are being laid. And those rails increasingly point toward HBAR, XLM, and XDC as the silent backbones of the next phase of financial infrastructure. So when you hear the phrase Goldman Sachs and blockchain, don't just think about them dabbling with Bitcoin ETFs. Think bigger. Think about the complete replacement of outdated systems with tokenized networks. Think about the quiet testing happening right now, the partnerships being drafted, the legal frameworks being reviewed. That's the real story. That's why the whispers linking Goldman Sachs to Hedera, Stellar, and XDC matter. Because if those whispers turn into announcements, it won't just be another headline. It will mark the beginning of a financial system reset, one that has been building silently under the radar, waiting for the perfect storm of regulation, technology, and institutional buy-in. When you start connecting the dots between these networks, the picture that emerges is a web of partnerships and interoperability that feels almost too coordinated to be accidental. On the surface, HBAR, Stellar, and XDC look like separate projects chasing different niches. One focuses on enterprise, another on cross-border retail payments, and another on trade finance. But if you zoom out and look at the direction the entire financial system is heading, you see that these niches are not competing, they are complementary. And in a world where institutions like Goldman Sachs, central banks, and multinational corporations are all trying to digitize and streamline the movement of money, the ability of these networks to interconnect may be the ultimate secret weapon. Start with Hedera. Hedera has always marketed itself as the trust layer for the internet, designed not for hype but for enterprises that need security and governance. As council members, Google, IBM, Standard Bank, Nomura, Dell read like a who's who of global powerhouses. And these aren't just logos on a website, they actively participate in governance. That model makes Hedera unique compared to other blockchains, which are often run by anonymous validators or dominated by a handful of whales. For institutions, that's a huge deal. But the real magic comes when you see how Hedera has started dipping into tokenization and interoperability. Take projects on Hedera like Atma, which tracks carbon credits, or the work around tokenizing real-world assets. These aren't just experiments. They're pilots for a future where trillions of dollars in assets are recorded, traded, and settled on-chain. Now zoom over to Stellar. Stellar operates in a different but equally critical domain: payments. Stellar has been relentless in pursuing remittance corridors, stablecoin partnerships, and CBDC pilots. Their work with MoneyGram brought real-world utility that bridged traditional finance with blockchain rails. And with Circle's USDC fully integrated into the Stellar network, it positions Stellar as one of the fastest and cheapest ways to move regulated stable value around the world. That's not something retail investors always get excited about, but from the perspective of a bank or a government, it's gold. Payments and settlements are the arteries of finance, and Stellar has been positioning itself as one of the cheapest and most efficient arteries available. Then there's XDC, which is often ignored in mainstream crypto conversations but quietly building in the background where it matters most: trade finance. Trade finance is one of the largest, least digitized sectors in the global economy. Letters of credit, invoices, guarantees, these are instruments worth trillions annually, and they still move at the speed of fax machines in many cases. The Trade Finance Distribution Initiative, TFD, has already recognized XDC as part of its exploration into digitization. That alone is a signal that XDC isn't aiming for retail hype. It's building bridges to the exact industries where blockchain could solve trillion-dollar inefficiencies. And because XDC is ISO 20022 compliant, it speaks the same language as modern financial messaging systems, something banks require if they're going to adopt it. Here's where it gets interesting. These three networks don't compete, they connect. Imagine a future where Goldman Sachs or another major institution is running tokenized securities or commodities on Hedera. Those assets need to move across borders, that's Stellar's role. And the trade finance instruments underpinning global commerce? That's where XDC comes in. Suddenly, you're not talking about isolated networks, but a web of interoperable ecosystems, each solving a different part of the financial puzzle. HBAR provides the enterprise-grade infrastructure, XLM provides the payments rails, and XDC ties in the trade finance backbone. It's not about one winning, It's about all three working together in ways that most retail investors aren't even considering. When you think about interoperability, you also need to think about the growing pressure from regulators and institutions for standardization. That's why ISO 20022 has become such a big talking point. It's the new global standard for financial messaging, and banks around the world are transitioning to it. HBAR, XLM, and XDC are all compliant or aligning with ISO 20022. That's not a coincidence. It's a deliberate positioning move to ensure they can plug directly into the systems banks are already using. Think about it. The SWIFT system is adopting ISO 20022, and so are major clearinghouses. If you're not ISO compliant, you're shut out of the game. The fact that these three projects are aligned here means they're not building in silos. They're building to be interoperable within the system that already runs global finance. We already know from public reports that Goldman Sachs has explored tokenized bonds and digital asset platforms. They've worked with other banks on distributed ledger pilots, and they've been involved in conversations with central banks and regulators about tokenized financial markets. So when you think about the potential overlap with Hedera or Stellar or XDC, it's not really that much of a leap. Hedera's governance model makes it a perfect testbed for enterprise-level tokenization. Stellar's payments infrastructure makes it ideal for stablecoin and CBDC settlement. XDC's alignment with trade finance digitization makes it a natural fit for global commerce. If Goldman or any other big bank wants to explore how tokenization interacts with payments and trade flows, these are the three networks that make the most sense. The beauty of blockchain is that even when these pilots aren't front-page news, you can often catch glimpses of them in the partnerships and integrations that are announced. When Hedera announces a collaboration with an enterprise-focused consortium, or when Stellar is linked to a CBDC study, or when XDC gets mentioned in the context of digitizing letters of credit, those are signals. They might look like small steps, but together they form a roadmap of institutional adoption. And it's the institutions themselves, banks, regulators, and Fortune 500 companies, that ultimately decide which networks get traction. Retail investors provide liquidity and speculation, but it's institutions that provide the real-world demand. What's fascinating is that the more these pilots roll out, the more it feels like they're converging. A tokenized bond issued on one ledger needs to settle in digital cash on another. A trade finance instrument digitized on XDC may require payment rails powered by Stellar. A carbon credit tracked on Hedera may need liquidity from stablecoins issued across multiple chains. That's the essence of interoperability, and it's why these three projects keep finding themselves in the same conversations. The future financial system won't be a single chain monopoly. It will be a web of interoperable ledgers, each specialized but connected. So when you think about institutional adoption, don't just think about headlines. Think about the slow, deliberate pilots. Think about the overlapping partnerships. Think about the fact that institutions like Goldman Sachs move carefully, but when they commit, they move billions, not millions. And if these pilots are pointing toward Hedera, Stellar, and XDC even indirectly, it means the foundation is already being laid for adoption at a scale most retail investors can barely imagine. When you step back and look at the bigger picture, it becomes clear that Hedera, Stellar, and XDC aren't just random altcoins competing for scraps of attention. They're pieces of a larger puzzle that institutions, governments, and corporations are quietly putting together. Whether it's tokenized trade finance, cross-border payments, or asset-backed digital markets, these three projects are positioned in areas that matter to the global economy. And while retail investors are busy chasing meme coins or waiting for Bitcoin to make its next big move, the infrastructure for the next financial system is being built in real time, largely outside of the spotlight. This is what makes the rumors and conspiracies so fascinating. They might sound wild on the surface, like Goldman Sachs quietly testing Hedera or Stellar, or XDC being the backbone of a future trade settlement system. But history tells us that the biggest shifts often happen quietly, then all at once. By the time the mainstream narrative catches up, the groundwork has already been laid, and the insiders have already positioned themselves. The real opportunity is spotting these moves before the headlines make them obvious. So here's the bottom line. Don't just follow the noise, follow the signals. Look at the partnerships, the pilots, the legislation, and the slow but steady creep of institutional adoption. Whether or not every rumor proves true, the trend is undeniable. The future of finance will not run on legacy systems alone. It will run on distributed ledgers, and networks like Hedera, Stellar, and XDC are already in place to take that role. If you want to stay ahead of this shift, keep following. Subscribe to the channel, tap the bell, and make sure you don't miss the daily breakdowns. Because the biggest opportunities in crypto aren't just in the charts. They're in understanding where the world is heading before everyone else does.